Like on my view, on my perspective, I think for payments, we are there already. Like it's just a matter of coordination because we have like ZK Sync. We have many solutions that for a simple transfer, it works, it's fast. The challenge is the composability. When you start to go to the DeFi type of thing that you tokenize something and then you use this as collateral and the position of the collateral should stay hidden. But the challenge in DeFi is when you have a system, usually AMM or a lending pool.
Welcome to a special live edition of Bits and Borders. This is a podcast dedicated to exploring frontier technology and frontier markets. And we're coming to you live from the TokenNation event in São Paulo here in Ibirapuera Park. I'm really excited to be here. I'm your host, Aaron Stanley, and really excited to be here with Rob from Pods Finance. Welcome, Rob.
Oh, thank you. Thank you so much for this special edition.
Appreciate you making the trip over here, So tell us a bit about your story personally, and then how you got into Pods. I know you guys have been around for a few years in the Brazil scene here, but maybe tell us a bit about like your personal story and then like what is Pods Finance?
Yeah, perfect. Yeah, so I'm actually naval engineer. My graduation.
Naval, like
ships, and petroleum oil here in Brazil because we have like a big ocean.
Yeah.
And back then that was the hot topic. But 2013, our industry here was not that good, and I always liked computers. So during the graduation, I thought, maybe I can go to computer science. So I worked in a few startups in Brazil. I was working already with edge technologies regarding big data and machine learning by the time, before AI. And then 2017, I found crypto. And the thing that caught my attention, that hooked me, was this mix between tech and relations, politics, finance, organizations, the history of money, and those topics. Because like before, with only working with machine learning, I only had the tech part. I didn't have the political and people part. So that took my attention. I started with Solidity. And I went to live in Singapore for a few years, for a year. And then I had a company, was already a order book router in Brazil in 2017. And after that, the company, we didn't found investments in Brazil. It was so hard to talk about crypto in 2017.
Yeah.
I went to Singapore, and then I went to work with a crypto company that was doing the ICO era. They were doing like a MetaMask competitor by the time. I was part of this new area called DeFi area. So my first day of work, my previous boss, he gave me this white paper of Uniswap V1. And he said to me, hey, take a look on this thing called AMM. So for some time, I had like the best job in my life because I was paid for doing research, forking all the DeFi summer technology that was going on, and to giving ideas to the founder. That was in 2018. I went to my first DevCon in Osaka, Japan, and I just went deeper and deeper in the habit hole before Pods.
Amazing. And Uniswap V1. I mean, that's like an OG handshake right there. If you were around for that era, right? I mean, that's super interesting though, because you were really around. I mean, I remember those eras pretty vividly actually, because I remember a lot of the that was kind of when Maker, the Maker DAO, the DAI stablecoin was launched. I remember kind of playing around with some of these Maker vaults, and I'm like, is this thing actually going to work? Like, am I what is this thing, right? It seemed like this kind of crazy science experiment, right?
Yeah.
And then we had the DeFi summer of 2020, which was part kind of COVID fueled because people had nothing else to do aside they're just locked up in their home and they're like, let's just kind of do some crazy things with these weird protocols, and you had this whole kind of like food token revolution, and like people piling all their money into like Yam Finance and stuff like that. I mean, it feels like doesn't feel like that long ago, but it's like actually like 6-7 years ago now, which is kind of crazy. Like, I guess we're getting old, but but it's like, it's super interesting because I think at that time, I don't think it was immediately clear that like this is really where like the product market for crypto really resides, right? I don't think we kind of had an understanding of it, right? Like, okay, there's something here we should be paying attention to, but we didn't really know that this is actually where the real product market fit is, right? Like, you have this idea of like global markets and global payments, and if your use case is something not related to those two things, okay, maybe blockchain isn't really like the best use of your time, right? I don't think we really had a clear understanding of any of that back then. But anyway, so maybe with that in mind, with that kind of backdrop, I would love for you to tell us a bit more about like your subsequent adventures in DeFi with like Pods Finance. I mean, you guys have done a few different things actually in the Brazil ecosystem and outside the Brazil ecosystem, and now you've kind of landed on what I think is really a very key part of the stack, which is really providing kind of like yield infrastructure, kind of like modular yield infrastructure, if we can maybe call it that, to a lot of these neobanks, which is kind of like, or I guess any type of bank really, but like neobanks is kind of everyone wants to be a neobank nowadays, right? So kind of the hot thing. But maybe pick up from there, your timeline, maybe around like 2020. Like what was kind of the path forward from there?
Perfect. Yeah. So I remember during this DevCon in Osaka, Maker announcing the DAI, because before that we have the single collateral DAI, and then during this event I remember, I forgot his name, the founder, coming
Rune Christensen, right?
Exactly. Yeah. Going to the stage and say, hey, now DAI is multi-collateral. And now if you look at Sky and
that's the rebrand, right?
Yeah, the new USDC thing, they have like even RWAs as collateral. Yeah, so crazy time to see. Yeah, so coming back to Pods, what happened in our journey is that this team, the DeFi research team here in Brazil, we started going to hackathons. And then in 2020, we went to If Denver hackathon and went to the finals with a very, by the time, like a new primitive, options on chain. So by that time, you had a few competitors like Opin, Hedgic, like those type of protocols. We look at ourselves and, hey, this makes sense in these next steps of the stack. Let's build another options protocol. And we built like our own smart contracts, 25 by the time. We went to all that journey of a DeFi protocol. We had like almost $10 million TVL. We never launched a token because in our mind, this token mania was like, hey, you shouldn't launch a token if you are not sure about the PMF, the product market fit. So I think that was the right decision by the time that we didn't launch. Yeah, so Pod started as a DeFi protocol. We had that vision that B2C was going on chain with those primitive protocols. But what we saw in the coming next years is that people, the retail, they are not using. My grandma is not using MetaMask.
Yeah,
it's too complicated. Even though we had few achievements in the past years, for example, account abstraction, I think that was a great achievement. The layer 2s for gas sponsoring and cheaper transactions, it's still very hard to go for retail directly to those protocols. That was one of the reasons that we left this idea behind. And the second reason is the primitive itself. Like options, in the end, derivatives in DeFi went more to perpetuals than to futures or options. So if you pick any project by that time, future swap, you had many. Most of them converted into GMX and Hyperliquid. Yeah. That's one of the main players are. Yeah, so Pods went to that B2C DeFi protocol route for 2.5 years. Then we started to realize, hey, retail is not coming. And we also had a founder realization that we are more technical. And B2C, you need more growth mindset, marketing mindset. And we were more the infrastructure guys, the technical. So we started pivoting the company. During that journey, we had a few projects here in the Brazil ecosystem. One of that worth mentioning was with the Brazilian CBDC. So the Brazilian CBDC, they were trying three privacy solutions by the time, one from Microsoft, another from Rails, and a third one from Ethereum Alliance, Ernest Young, Starlight project. But they didn't have any team here in Brazil with technical knowledge to implement the protocol here. So they hired us to implement this pilot project for the banks. So it was a very nice project. We had this. I think we are one of the few projects that had the opportunity to work in the very large part of the spectrum, like from the DeFi protocol on one side, totally permissionless, to working together with the regulator in a permissioned blockchain. So this project with zero knowledge was very good. I think the main learning there is programmable privacy we are still
really hard.
really hard. Right. And I think we're not there yet.
Yeah.
Many challenges. And but we also did other projects for the Brazilian ecosystem during that time of researching. We did POC with Nuclea, the registry notary here in Brazil.
Yeah.
They created the boletos. They created the TED and DOC that before Pix was how you transfer money here in Brazil.
Yeah.
So we did a RWA project with them, tokenizing the journey of debt for constructors, the real estate market. And we also did a project with Mercado Bitcoin regarding tokenizing the treasury bonds from Brazilian government. Yeah, and finally, after all this 1 year researching and doing those projects for the Brazilian ecosystem and more for traditional companies, we found our space in between.
Got it.
Hey, we don't want it to be the DeFi protocol, totally permissionless, but we also, it's not our fit to be in the traditional market. So why not connect those two worlds? Why not live to the neobanks that is finding the journey to retail and help them connect to the DeFi primitives.
Right.
One of the DeFi primitives that we started was the yield. Today in our system, we also have RWA yield that is not that easy to distribute because you need KYB, KYC. So we remove this barrier too. We also have savings accounts, cross-chain swap. So it's more broad than only yield. We see us more like a orchestrator, more a DeFi or neobank toolkit.
I like that.
Yeah.
That makes a lot of sense. And a couple points of reaction there. You have a really incredible breadth of experience, which is, across like a wide, like this journey is like, you've been, there's a lot of destinations on your journey so far, we'll say that. And I think even, the realization fairly early on that, DeFi is not this is not like a retail product, right? It's just not, right? Like your grandmother is not going to be trading, perpetual swaps on, like Hyperliquid or whatever, right? Or like these are, and I think for a couple of years there, I think the DeFi world just kind of got like so sort of like, I don't want to say maybe like drinking its own Kool-Aid too much or whatever, but like, you have all these different L2s launching and people are trying to recreate the same stuff on all these L2s. And it's like, ooh, come build your, decentralized, futures platform on Mantle or something. And it's like, well, that's not going to make it any easier for retail people to come, right? So, and even with like Hyperliquid, like to get in Hyperliquid, you had to bridge through like Arbitrum first, right? Even to get to Hyperliquid. So it's like, we say that we're trying to make these things for like the average person or whatever, but actually we're just making it a lot harder for average people to get access to this stuff, right? And it sounds like you guys realize that fairly, maybe not early, but like at a certain point you realize like, hey, maybe this isn't actually the the end game we're trying to get at. And And then this, I mean, the privacy question is actually a really interesting one. I'd like to maybe just kind of double click on that really quick, because I think now that I mean, privacy is kind of like the alpha narrative in crypto again, right? It always kind of goes through these waves, right? Where people care about it for a while, then they don't care about it, then they care about it again. And I think people are finally realizing, like, oh, for like stablecoin payments to actually work, like you need privacy, because especially in like, a country like Brazil or any kind of country where there's like, there's maybe a risk of, you're not going to go pay for your coffee with Tether if, that the barista can just look up your, on a block explorer, your wallet, and see how much money you have. Like that's a non-starter for any intelligent person, right? So like you need these types of basic privacy primitives in place for any of this stuff to really be adopted at scale in the markets where this stuff would actually have the most impact, right? And I think, the Drex project, and I mean, we've already done a lot of coverage of the Drex project, so I'm not going to go super much into that, but I think it really kind of like the whole idea of like the Drex, the Drex triangle, like the Drex trilemma, right? Where of like, which I'm forgetting the three. It was like programmability, privacy, and like composability or something like that. Or it was
scalability. I think,
scalability. Yeah, it has to be scalable, it has to be composable and programmable, and has to be private, right? Yeah. And like trying to get all the three of these things together proved to be, ultimately just like a bit too much, trying to do too much at once, essentially. But it exposed this issue of privacy in that you're like, for any of this stuff to actually work, like in a regulated context, you have to have some kind of like backdoor, if we can call it that. I mean, it's not we don't like backdoors to these things, but like there needs to be some kind of regulatory node that has like some sort of visibility into these systems. Otherwise, it's just no regulated financial institution is going to be able to use this stuff, right? That's just the fact of the matter. And I mean, maybe I'd love your thoughts a bit more on how, how far away are we from achieving some of this stuff? And I know there's a lot of people going around making claims about different, like, oh, we've figured out the solution, or we figured out how to do these things, and like, with like confidential compute and like fully homomorphic encryption and some of these types of things, or even just like using zero knowledge proofs. But is any of this stuff like actually fit to, to be used at scale and to be used in like an institutional context that, Itaú or like a BTG Pactual or like a Wells Fargo would be like, okay, I'm comfortable using this. Perfect.
Yeah, good question. And very good question, because I think it's one of the hardest answers. Like on my view, on my perspective, I think for payments, we are there already. Like it's just a matter of coordination, because we have like ZK Sync. We have many solutions that for a simple transfer, it works, it's fast. The challenge is the composability. When you start to go to the DeFi type of thing, that you tokenize something and then you use this as collateral, and the position of the collateral should stay hidden. But the challenge in DeFi is when you have a system, usually AMM or a lending pool or something like that, that you share properties. What I mean by that, like when I add something to this system, you change the price of the pool, and you, the other side, are going to be impacted by that change. Then it's where the things got like unknown. And in this type of programmable privacy, I think we still need to find other. Maybe we'll need to change the architecture instead of like, hey, let's build Aave. Let's try to put a privacy layer on top of Aave. Maybe we should start from the scratch, and Aave, the way that it is nowadays, is not going to work. AMMs with public pricing, we should change, like maybe one of the considerations, like, okay, you're going to have private AMMs, but the price is going to change every 5 minutes, but because this gives us time to mix the positions, those type of things. The solution, the edge solution on programmable privacy is the FHE, the fully homomorphic encryption thing. The problem there is the hardware acceleration thing. In order to find those hashes that maintain the mathematical properties of sum, multiplication, and those basic math properties, you need to, it's kind of a proof of work. You need to guess the exact hash that are going to maintain those properties. Anyway, so there are chain of challenges in this thing. So FHE, like with Zema guys, and I don't remember the name of the other that are leading the space on this sense, they are quite new. Like they are projects with like less than 5 years old. So
yeah,
for payments, I think we are going there. We already have seen some wallets that for card payments, you already have the privacy embedded. But for those more complex DeFi properties,
yeah,
I think it's going
yeah,
to be
and I know there's even like chains, maybe this isn't maybe the best example, but like Liquid from Blockstream, like that's a chain that has more of like some of the privacy elements like kind of built into it. That's and then obviously like there's a big resurgence in Zcash now. I mean, Zcash obviously not really something you'd want to use for payments, but there's even, I think even with like the near intents, like they're allowing for some of the so stable coins to be you can from what I understand, you can basically like make using the near intents protocol, you can take a stable coin from another chain and basically transact it privately with a certain degree of privacy anyway. So it's like we're getting to that point, but it's not quite. There's still we're getting there. But then on the composability side, when you want to use these assets in like markets and like a composable DeFi setup where I'm going to tokenize my car and then I'm going to use it as collateral and like okay, like we're a little bit further off from that kind of thing, right? And
yeah, I would add a fourth thing to the equation that's permissionless. I think like for a more centralized solution, I remember Rails, for example, like where two parts of the nodes can go to off-chain thing, do some stuff, come back to the on-chain thing, do the settlement there. When you introduce more central parts to the system, it's a little bit easier to tackle the problem. The more public that you go is even harder.
Yeah, and that's always one of these paradoxes, right? Of the blockchain world is like you can control all these things if you have if you control the network, you can control all these factors. But once you try to make it, you try to bring in the benefits of an open public system, then like you have to start making compromises on something, right? So one of these paradoxes we keep running into. But let's talk a bit more about what you guys are doing currently with pods, which I think is really interesting and really important because I think we've the kind of the narrative in crypto now is this idea of neobanks, especially in Latin America. I mean, it's like every time I open up my Twitter, I see some random new guy and some random new protocol talking about how like, we're enabling crypto to pick spending, via our wallet or whatever. Like okay, like I can't even keep track of these things anymore. Like there's tons of these things popping up. Even at this event, you have things like Cast and some other folks who are here. And there's obviously a lot of popularity for these products. And it's not just neobanks also. Like you have a lot of the big, the traditional banks, and even kind of the, what we used to call kind of the challenger banks, which, like the Revoluts or whatever, which aren't really new anymore. They were new, but now they're not new anymore.
Not so new.
Not so new banks, right? But a lot of these guys are like embracing digital assets now as well. And I think there's a lot of interest in, okay, now that a lot of these yield products, as a result of like kind of all this, these years of, kind of crazy experimentation in DeFi land, right, that we were talking about earlier, we've gotten to the point where like these things are actually pretty well battle tested, right? Things like Morpho and things like Aave and things, okay, like you can, like these things aren't just like straight up Ponzi schemes. Like, most of those have kind of gone away, and like the things that are legit, okay, like we can trust that, okay, this yield is that's being generated is actually, there's something legitimate there that we can confidently offer our customers. And then the question is really like, okay, like how can I implement this into my stack and start offering this to my customers in a way that's, I don't have to, hire a whole new engineering team to do this, right? Because I think that's, you're trying to, obviously you have your tech stack and you don't want to have to like retrofit your whole stack just to be able to offer one new product, right? So that's why I like the concept of what you guys are doing, where it's really kind of a modular, like, hey, let's build out this yield, yield infrastructure, vault infrastructure, allow you to plug in with an API to be able to access these types of products. And, you guys are not, as far as I understand, like you're just a tech provider here. So you're not like, acquiring any licenses or anything, but like you're basically, I mean, maybe you would at some point, depending on what the use case would be, but like, you're basically just saying like, hey, like you're a regulated financial institution, like you have customers, you want to offer yield to your customers in some various formats, plug into our API, and you can kind of pick and choose which of these products you want to offer. Is that more or less the idea?
Yeah.
So let me talk a bit about like, why is that so important for these? Like, how is that such a value add to these banks? Like, how does that make their lives easier in this context?
Yeah. So I would start. Do you want me also to? I think one interesting thing to talk about is the concept of a neobank, like why we move it to serve those players. So, in my opinion, like the neobank thing is more related to be we in the 80s and 90s we came from these SuperApp banks.
Yeah,
one bank, one-stop shop for all the products. And in the past decades, not only with DeFi, we are seeing this movement of breaking finance in smaller pieces.
Yeah.
So we have like Stripe for payments, Robinhood for investments, XP here in Brazil, XP for investments, all the FIDICs, the credit, anticipation of credit for many different startups. I'm seeing this movement as the neo finance, like where we came from the one bank big infrastructure more to these smaller pieces. And those smaller pieces, I see a similarity with what happened to the internet, like with communication here, like you. Before you had like those big players, one-stop shop media channels, and then with YouTube channels or a blog, now it's not that expensive to have a niche channel.
Yeah.
Before, like you couldn't serve like a channel in TV, had to choose. Oh, I think this space, this niche is not big enough to justify to have a program for that. Now, the infrastructure is much more cheaper. Finding your client because of the internet, cheaper also. So we had this movement. So I think neobank, neo finance, and on-chain finance is just helping increasing this speed for finance for niches.
Interesting.
And with better niche, we have better communication. First of all, we have better communication. Let's say for sometimes maybe a feature, let's say iFood here in Brazil, they are building a bank. Probably a feature for helping the restaurants to get short-time loans to better improve their operational costs. It's a feature that could be like one of the main features for this type of bank for restaurants.
Yeah.
And for a traditional bank, similar to the YouTube channel, you don't have a big enough space here to justify have this inside your app, or it's not going to have like a big space, like just maybe like this feature should not even exist in an app for the general purpose population. Yeah, so that's my take on the neo finance.
So the idea is that basically like this super app concept, and we've seen kind of popularized in like Asia, right? If you go to you mentioned you spent some time in Singapore, like if you go to Korea, it's like Kakao, or I think it's Kakao is the name of it. And like Japan, you have like Line, and China you have WeChat, and Alipay, and these things are kind of you can order your food, you can book your taxi, you can make payments and stuff like that. But you're saying you're seeing kind of like a splintering or kind of a break, more specialization across different channels, right? So it's like, okay, maybe I'll do my banking with Itaú, but for like my investing or my kind of day-to-day payments activity, I want to use this product because maybe it allows me access to, I can get yield on I have a stablecoin balance, I can easily get yield on that. So, maybe that's, as a consumer, like that's more of a, that's a lot more than I'd be getting if I kept my money at ease. Ooh, so I'm going to use this, right?
Exactly.
So, and then maybe to conclude here, we're running out of time, but maybe just talk a bit about, what have been some maybe successful cases or successful kind of, use cases thus far that you guys have seen?
Yeah. So one of our biggest clients here in Brazil is Picnic, and Picnic is one of the biggest non-custodial wallets, competing with Cast and Red.Pay. And with them is more than just yield. So we are positioning ourselves as the neobank toolkit for this on-chain finance stuff. So one successful case with them is the savings account, where we package a lot of protocols around it in a good UX. So it's a yield in Sky, by the way, coming back to the beginning with Maker, but with insurance against protocol hacks, Oracle pegs, stablecoin pegs. So, and cross-chain where you don't lose slippage between those transactions. So you don't need to choose a chain. Hey, give me USDC, whatever chain you have in our API, and I give you back the position on this insured on-chain yield vault. In addition to that, we add tracking to profit, data, enterprise kind of support. So when you say, what do you bring to the table? What do you add to those neobanks? So creating a product, a DeFi product nowadays, especially with AI, is not the hard part. The hard part is 24/7, never have bugs.
Yeah.
So the profit is always correct. The tracking data is always correct. So those type of enterprise grade solutions is hard to get it. And that's what we are bringing. So with this product, we already seen in 10 days, more than 10% of the base that had idle assets in the app invested in the savings account.
Okay.
We also have with Picnic a cross-chain solution for USDC to BRLA. With this product, we are running almost $2 million in volume per month in Brazil. Yeah, so, and we have other neobanks, for example, Revo Finance in the south. That is another neobank, more focusing. Picnic's more a travel card. So the ICP persona here is the traveler. Revo on the other side is the agente autônomo, the financial advisors. So they are building a neobank that you need to have more information. Right. So for them, our data API is more suitable, solving that problem of tracking all the positions of all the financial advisors.
Amazing. No, super interesting stuff that you guys are building, and I'm really encouraged to see that you guys have found some good traction with this suite. And I think it's something that's going to become this type of product suite and these types of really kind of building this middleware between kind of this B2B2C model of building this infrastructure as kind of like a plug and play, modular apparatus for banks or for wallets or for other types of financial apps to kind of tap into to be able to offer these services in just a very clean and just efficient way, right? Because the alternative is you have to build it all yourself, right? Which is, as you can probably, and maintain it, yeah, which, as you can probably attest, is not the easiest thing to do. So being able to kind of just modularize some of this service and, terceirizar, I guess, as you'd say in Portuguese, definitely a value add. So that's about all the time we have, but Rob, really want to thank you for coming on the show. It's great to have you here. And thanks again to TokenNation for having us, and we'll see you next time on Bits and Borders.